We're going to have a panel involving Brendan Malone, the MD and CEO of Raiz Invest, Sam Power, the Chief Growth Officer of Abound, Dan Jovevski from WeMoney, founder and CEO, and sock maker, and rugby jersey manufacturer, and he does a lot for the TCF industry in this country every year when it comes to Intersekt, and Logan Chandrakumar, the Director of Investment Attraction Insights at Invest Victoria. Gentlemen, come on up here, put your hands together for all of them. Combating the global cost of living crisis. Of course, show and tell why we invested in our portfolio is on stage 2, if you're interested. This is going to be fun, and yes, Dan, please throw out some socks to the audience, but not to that lot there. Hands together, come on people, give them a hand.
All right, now we're all sitting next to our photos, so you don't get us confused, although you'll notice that I stand out in this crowd. I was glad that we followed that panel just before, because when I saw there were 4 dudes on this panel, I was a little uncomfortable about that, but it's great that there is a bit of gender balance across the event, so that's fantastic. We'll dive straight in. You guys all are quite well known in the sector. Cost of living, it has been a hot topic, not just in Australia, but globally in the West over the last couple of years. Now, you all have products that are aimed at helping people manage their finances. But maybe we'll start with a view from the coalface. You guys probably have a unique perspective on the cost of living challenges that are facing Australians and people around the world. So Dan, I'll start with you. Now, your platform is dedicated to giving Aussies a 360 view of their financial position. Are you seeing people cutting back, consolidating debt, or are they dripping into savings more than ever before?
That's a wonderful question, and I kind of reflected on a few things before coming to this panel today. Each year, WeMoney runs a financial wellness survey where we get to get the heartbeat, the financial heartbeat of Australia. And Australia is well known for winning rugby sometimes and reaching the podiums in the Olympics, but some other things that I think that we shouldn't be known for, which is Australia today has about $2.66 trillion of consumer debt. That consumer debt is dispersed largely amongst young people today, those 18 to 40 years old. And in this survey, some of the things that sort of came up that I think is quite startling. And I wanted to also provide a reminder to everyone in this room, and my fellow panellists, I'm sure we're going to expand on some other insights, is today, 50% of all those survey respondents are living paycheck to paycheck. And we think about people living paycheck to paycheck, and it might be across, people on the median incomes or below, but in fact, those who are earning more than $200,000 a year, 20% of that cohort reported they were living paycheck to paycheck. And there is this sort of schism, I think, at the moment where, the economy might be going good, but if you look at the individual household level, it paints a very different picture. The other really interesting insights is that 54% of people reported that they got into debt in order to make ends meet. And the final sort of remark that I'll have is that we get a very fortunate position when people sign up to WeMoney to report one of the reasons of why they signed up, because it usually takes a motivator. I heard from a lot of people today say, hey, I downloaded the WeMoney app and I downloaded it, did my ID, connected my accounts. But usually it takes a trigger, something that happens in your life in order to say, hey, I need to sort something out or I want to achieve something. And I could share a lot of stories, but the one that kind of really stood out to me was from a member called Janine. And Janine mentioned that the reason why I downloaded WeMoney is because I could use the hot water at home and give my kids a bath. And so to put things into perspective, the median income today in Australia is just over $60,000. All of us in this room are very fortunate. In fact, we're probably all in the top 20% of income earners. And so I just thought I'd provide that sort of stark reminder is that today we're living in an era of inequality. The median age of a first home buyer today is 56. And Gen Z and millennials, which are 55% of the population, only have about 12% of our wealth, versus Gen X's and baby boomers, which have the 78%. And so I think we're still in that very challenging environment of living under those cost pressures.
Brendan, I'll come to you, and I'm going a little bit off script here, but just we're chatting beforehand, and just picking up on Dan's theme there about inequality and getting people into the wealth game. Tell me a little bit about, I guess, your kind of mission, if you like, and what drives Raiz, and that the aspect of opening up wealth to others who might not inherit it.
Look, I think I agree with everything Dan said, and it is getting harder out there, and we see that from how we've structured our Raiz product. And just to put a bit of context in it, we've got over 330,000 users on a daily basis saving and investing in the stock market. Yeah, and we see it. We started with two core principles: small amounts consistently over time add up, and we're in the functionality of roundups, so we're just shy of $2 billion of funds under management, but also using technology to make everyone's life easier with the automated savings. And the shift in people's behaviour. People used to save for a house, save for a holiday, save for those bigger ticket items. We launched a product called Jars in January, and we see people, and it's a sobering moment, seeing people setting up every week jars. Somebody's saving for a haircut. They're putting $5 away a week into the haircut. Now, they might not have that amount of money for an expensive haircut, but it'll help that week living. So what we're trying to do with Raiz, from cradle to grave, is provide that financial education, financial literacy and financial inclusion, because I want to deliver every next generation to build on what my father taught me. I've taken that, I've learnt more, and I want to pass it on to Tom and Isabel. I want them to pass it on. So it's all about, and we see wealth and savings as a sort of a right, not just a privilege.
Thanks, Brendan. Sam, you've come across from the UK. Your model provides access to responsible lending. And I guess based on both what you're seeing in the UK as well, are you seeing greater demand for that short-term credit? And what does it tell you about the financial stress that people are under?
Yeah, so for those who don't know, we use open banking to increase access to affordable lending. So every single customer can access their bank account, and it really allows us to see a lot more than what a credit report would. We can actually focus on what somebody can afford to borrow. The UK is in a very similar position, I think, to Australia. Real wage growth is much slower than inflation. Housing prices are going up. And how that translates into our user base is most people actually come to us to consolidate more existing debts. So roughly 2/3 of our customers come to us to refinance, a lot of the time short-term high-cost debt. And over the duration of a loan, we're able to save them £1,040 on average, which does make a difference. But yeah, we're seeing a lot of the same behaviors where people are turning to short-term lenders for payday lending, or income advance has become really popular. And it's I think where we try and differentiate ourselves is to do it in a more responsible way, where we're trying to pull people out of debt spirals, not put them into persistent lending. Because at the end of the day, if you do lend responsibly, it does enable some of the bigger moments, right? You can do that home improvement, you can buy a car, you can buy a house for the first time. It just needs to be done responsibly.
Great. Thanks, Ab. Okay, now that we've got, I guess, a bit of a sense of the challenges, let's talk about how your various platforms help people manage their finances. Dan, a classic piece of advice, which my wife gives me often, is make a budget, which I fail miserably at. It sounds simple, but many people are overwhelmed. How does something like WeMoney move beyond the basic spreadsheet to give people actual actionable insights that can save them money?
Logan, that's great. And like your wife, my wife says the same to me. Like a mechanic who doesn't fix their own car. WeMoney was born out of that frustration of kind of scratching my own itch. Here's a kind of really interesting thing, is that we think a spreadsheet is the thing that people use when they budget. And remarkably, it's not. What people use, in fact, it's not a pen and paper, that's where people go to next, is their own mind. Is that we kind of run our lives in this mental kind of arithmetic. And so just think about how life happens. Monday morning starts, you're going to work, the hot water system blows up on Tuesday, you've got to think about, well, I can't afford this, I don't get paid until sort of Thursday. And those life events that happen to us, some of them are banal, some of them are unexpected, they all typically happen up here. And so the way that we kind of see budgeting is not to teach us to budget better, but actually abstract away budgeting even as a concept. And there is a really prominent behavioural scientist called Dan Ariely. And Dan Ariely kind of talks about this meta-analysis over 1,000 studies of financial education and literacy and budgeting. And so you attend these courses and you sit down and you go through this 1.5 hour, this is what simple compound interest means and this is how we invest and get into the stock market. And they did a survey, 3 days later, and what they found was remarkable, is that the retention rate of all that information was 0.4%. And so I think we're kind of entering into this sobering reality, is that what can finance, what can things like consumer data right, offer to people, where we're on like what Elon Musk wants us to do. This week is an Australian first. Victoria got it. The ability to do self-driving, and Queensland just started this week. And so we think about, taking our hands off a steering wheel and moving not only our loved ones from point A to point B. Why can't our money be exactly the same, where we don't have to worry about that stressor of finances and have our budgets and our financial lives taken for us automatically? And that's essentially the path that WeMoney has been on, is to materialise that future.
Fascinating. Let's hope that the self-driving analogy holds up when we look back on this this conversation. Brendan, I'm actually old enough to remember when CBA shares were first put to the market, and it kind of changed, I think, the way Australians thought about wealth and share owning, and made it much more accessible. 95 cents, the sort of spare change at the end of a coffee, doesn't necessarily sound like it's going to change the world. Make the case for us. How does small, consistent saving make a meaningful difference against inflationary pressure?
I think, picking up what Dan said, it's the automation. That's it. If I ask Dan for $50, he'll say, hell no. If I ask him for $1.50 times, I get a better chance of getting that out of him. And that's exactly what Raiz does. Break it down into bite-sized challenges or bite-sized information. It's a bit like an athlete. You have to do little bits of increment to get better. Well, why don't we apply that to our money? Why don't we apply that even to our financial education? So Raiz breaks down the barriers, not only to the entry into the stock market, crypto, or even the residential property market that we've done. You're breaking down the barriers to kill all that financial jargon. We talk about budgets. We've done surveys, and 78% of our customers will say they have a budget. 43% of them stick to it. We look at their data, because we can see their bank accounts. 48% don't stick to it. It is down to the ones and twos. So automate it. As I said, Raiz gives everybody the ability to automate their functions. And I say to my wife, or she says to me, hey, I spent money today, but I rounded up, so I saved some. So that's her excuse. But it's her being honest, and it's all of us being honest, and Raiz provides that. Be honest where you're spending your money. I could ask everybody here, put your hand up if you spent at McDonald's in the last 30 days. Nobody will admit it, but some people have. It's like your money's there. You can see the roundups coming. How did that roundup come? Oh, I don't need that Apple subscription anymore, so I'm going to cancel it. It's making people aware of their transactions and automating things for them.
Fantastic. Sam, let's talk about the credit trap. Sorry, it's early in the morning. Someone needs a loan, but their traditional credit score isn't great. So they take one of these sky-high interest rate loans. It makes the situation worse. How does Abound's use of open banking and AI break that cycle and provide a fair assessment?
I think one of the central problems with credit scores is that they're just a very incomplete view of somebody's financial situation. You have to take credit to get one, and you can't get good credit without one. So it becomes this chicken and egg problem. So what we try and do is we have to look at the credit file for regulatory reasons, and we want to check that the person, has decent repayment history if it's there. But a lot of the people who come to us don't. They might be new to country, new to the workforce. So there's just not enough information for many people, many other lenders to lend to them. So what we do is by allowing them to connect the bank account, we can really pull out the key behavioral stuff behind their financial situation. And at the end of the day, everyone's pretty different, right? So we've developed now a feature set of about 4,000 features that we look for in the open banking. Obviously, not all of them are relevant for every customer. But we're really, I guess what our technology really tries to do is pull out that handful of things that are really relevant to them and lend on that basis. And a lot of that is to do with affordability. And I think that's reflected. I mentioned the 2/3 of people come to us to consolidate existing debts. I think that's reflective of that.
So you're looking at 4,000 different data points. Is that
More. I mean, with open banking, the average customer would have about 5,000 transactions in the UK.
Right.
But we have about 4,000 lots of them are behavioral. It might be like, there's a lot of things that show positive repayment behavior. It might be a Netflix subscription, a gym subscription. There's also negative things like excessive gambling. And you can see all of these things. There's also recurrency things. One of the most predictive features that we have is we call it the cardio. It looks like an ECG. It's like money comes in each month, it slowly comes down, and it should look really cyclical. And if it is, that's a really good pattern. So the 4,000 things there's 4,000 of these things,
Cool.
and we're really just trying to identify what are the really key ones for each person.
Fascinating. Now, you've all sort of spoken about financial literacy a little bit in terms of your responses. I guess from your customer base, how many of them are sort of first-time investors, first-time savers, people who maybe don't have that history of wealth or financial management? And I'll start with Dan and we'll come across, but just going back to this notion of opening up finance and opening up that wealth generation for others, what are the patterns you guys are seeing in terms of people who might not traditionally have invested or saved as much? And how do you think your platforms are opening that up for more people?
That's great. I just wanted to make a little comment. And Brendan said that I had to give him $50, but I've actually given Brendan over $1,000, and he's given me $1,000 back because I was one of the very first members of Raiz when it first launched in Australia. And at the time, I think I was, skint as an entrepreneur, sort of first starting off. The concept of even sort of buying stocks wasn't a reality, and it made that sort of process easier. And if you kind of look around at, those people who are earlier on in their phase, they've got their first job, and they see the, movies and people investing, and they hear these concepts like NASDAQ and NYC and ASX and shares. These are complicated concepts for people to learn and understand. But the thing that we found from our membership base is that there is almost like this invisible barrier, this sheath that kind of sits above and say, hey, that's not for me. That is for people that are much more affluent, that can have those opportunities and have higher incomes and are more affluent. And I think the power of what these incredible people are doing and everybody here in the community is to make that more accessible, to feel like they can participate in Australia's national prosperity and prosperity for their own lives and learn. Because the best way to learn about investing or budgeting is by doing. And that's what we see as the true transformative potential, is providing access to those people that don't have it. I mean, today, if you just think about what it goes and takes to see a financial planner, for example, it's $5,000. If you think about somebody who's on that median income or lower, where are they going to get $5,000 from? It's an impossibility. And we see, and I think there's remarkable examples here in this panel, where platforms that are lowering that cost burden, that cost to entry, to get access to the tooling that are only afforded to the people that were super wealthy and could afford it, and that's exciting.
Look, I think that's exactly right. So we broke down the barriers to investing for as little as $5. And when we first launched years ago, everybody laughed at us. There's no money to be made. No, it's not about that. It's about opening up the market, giving everybody access to the market. And now we've got $2 billion of funds under management. There's not that many asset managers out there, that, apart from the super funds in Australia, that would have the $2 billion. And we've done exactly what the CBA did for a public offering, and I think it was Telstra 1, 2 and 3 and NRMA, and we've given everybody access. And the best part about it is for as little as $5, if you don't like it, there's a big red button that says withdraw, and we give the money back. Yes, there's a T2 settlement on the ASX, but it's letting them have it, and we will see. So they are first-time users. Somebody will download the app, put in $10. They'll withdraw $10. Oh yeah, cool. It does what it says on the can. Then they'll put in 100. Sort of, I think it's something like 14.8 days later, they turn on the recurring functions because they've used to it. They've realised they can use the roundups. They realise that it is I think it was $8.75 for males and about $9.28 for females on a weekly basis of roundups, because the more you use the card, the more you have roundups. Then they've said, oh, I can afford that after 2 weeks. So then they automate that. So it's creating, they are first-time users, but you have to give them the access to go, right, okay, actually it's not for me, because we know people change. And it is quite funny when you talk about threshold ceilings. Like when I grew up, it was always have $1,000. Car breaks down, I get injured playing rugby or something like that. I need that emergency fund. We can see people will get to 600, and then cool, they withdraw to 500. Then they get to 1,200, and then they go and celebrate or do something with the $200, but they always come back to those amazing sort of psychological barriers, 500, 1,000, 1,500, 2,000, but they keep going.
Fascinating. Sam?
Yeah, I think for us there's kind of two parts of that. One is we have people who have existing experience with the financial situation, but it's pretty negative. So it's trying, I think for us, what we do to try and counteract that is let them check their rate really quickly and if they're eligible for the product. And all we care about is getting them the money as quickly as possible. So can we give them the cheapest rate, which we nearly always do, and can we get the money in their account in under 24 hours? And then on the flip side, we do help a lot of new to country, new to workforce people who have never taken out credit, but the same principles apply of just wanting to get it as quickly and cheaply as possible.
And Sam, are these people who wouldn't get credit elsewhere just because of the new to country, new to workforce?
Yeah, exactly, yeah. So we directly lend ourselves in the UK, but we also built a platform that allows anyone to launch lending products using open banking. So one of the recent examples is a company called Lemfi. It's a unicorn based in Nigeria. They have several 100,000 users in the UK who are sending money back each month, or even more frequently, to Nigeria and West Africa. And most of those users, lots of them are care workers. They've maybe been in the UK for a year or two, never taken out credit, and we've given them their first credit card that will allow them to get on the credit ladder and build their credit score and get into the system.
Fascinating. I grew up in Nigeria, but a financial institution in Nigeria. That's a first with all the all those calls we get from Nigerian princes. Anyway, all right. Now a slightly more provocative question, I guess. So we've got tools across this group for visibility, investing, and credit. Are we at risk of creating a world where people are just sort of staring at financial apps all day, optimizing every cent, but just adding to their anxiety? How are you guys balancing the powerful tools that you have with promoting genuine financial well-being and peace of mind? Dan?
Like, it's such a great question, and I kind of really think about this as like, we shouldn't be looking at apps, right? And if we think about apps today, they're kind of ones and zeros and sort of pretty colours, but I kind of see a future where like a lot of these apps actually look like alleviating some of those things that we talked about. In fact, the word stress, anxiety, being held back appear more frequently than any other word when people say the reason why they want to overcome their issues with managing their finance and anxiety. And that's been proven by a lot of studies with amazing universities like MIT, who did an analysis over 100,000 people who uncovered that essentially when we have money issues, this is a cognitive fog that kind of attacks our brain that prevents us from thinking about anything else. So if you're in a person that's in financial stress, and I'll just share this little quick story from Renette, who's one of our beautiful members, 56-year-old from Bundaberg, Queensland, who was in $18,000 of credit card debt, paying $700 each and every single month religiously. She stumbled across sort of WeMoney, connected her accounts, found out she could reduce her repayments to $350, and that allowed her to go live her life dream, which was to take her 2 kids on a trip to Japan. And so we think about what money is, going back to the car analogy, it simply is a battery. It stores the energy and we kind of release it on things in life. And I think that the way that we're living in, like the era of abundance, the power of gods in our pockets and our computers, how can we take that transformative technology and alleviate some of those stresses? Well, we don't have to think about money. We don't have to think about the things that are holding us back, that are setbacks, and think about more about things that we can have as setups for life ahead. And that's where we see the future, I think, of this really amazing technology going to. So that's what I'm really excited about.
100%. I think we've done a lot of surveys with our members, but also with some partnering groups about mental health. and 70% of mental health issues come from finance. You know, even from divorces and things like that. A lot of it's about money. So that's what we're trying to do: financially educate, financially make them aware of where they're going, where they've been, but admit and be honest to that to help you go forward. So it's a big part of our mantra.
Fantastic. Sam?
Yeah, and I think building off what you were saying about putting things on autopilot, it's just getting easier and easier to do that. So for instance, if somebody comes to pay off debts with us, we'll pay off the creditors, the other ones, ourselves. They don't have to do anything. It's all on autopilot. And I see it going a similar way in credit where, you know, maybe apps like WeMoney or in the UK equivalents like Credit Karma or ClearScore, they're already working on this where they'll just be constantly checking, is this the cheapest rate? And refinancing in the background. So you don't have to think about it. You're just always getting the best deal. And I think that's kind of the direction of travel that we hope happens.
Great. All right, we've got a minute left, gentlemen, so we'll do a lightning round. Looking ahead over the next 2 years, what is the next FinTech innovation that will help people manage their costs better? Sam, we'll start with you just to mix it up.
Yeah, I think it's just building off what I just said, where I think there's just going to be more agents being able to do stuff for you, whether it's in-app or just in the background. So that's what I hope happens, that we don't have to actually become that financially literate because the best things are just happening to us based on the goals that we have.
Yeah, look, I completely agree. I think personalisation, you know, with the agents or the AI, autonomous, all that around there, saying what Dan's saying about access to financial advisors. You know, I mean, there's some people that won't like this, but the hubs and the net wealths of the world, I don't think those platforms will need to be there because what we're all providing to our customer and, importantly, putting our customer first, that's where it's going to go.
I'll be very brief because the time is going off. Instead of a cost of living crisis, a joy of living jubilee, where the power of these transformative technologies allow us to focus on becoming happier people.
Fantastic. I'm going to download both of your apps after this, and hopefully I'll be filthy rich in a couple of years and won't need a day job. Ladies and gentlemen, please give our panel a fantastic round of applause. What a fascinating conversation. Thank you, gentlemen.
Thank you.